In the first half of 2025 fiscal year, the private sector borrowed a record 1.9 trillion rupees from banks, marking a 265% increase compared to the same period last year. Data from the State Bank of Pakistan released on Monday shows that despite economic challenges and political uncertainty, banks have continued to lend to the private sector. The surge in borrowing can be attributed to the sharp drop in interest rates. Since June 2024, the State Bank has reduced its policy rate by 900 basis points, bringing it down to 13% after it had peaked at 22% in the previous year. This has made borrowing more affordable for businesses. Additionally, the decline in inflation, which reached a 7-year low of 4.1% in December of 2024, has paved the way for more rate cuts, further easing financial conditions for the private sector. Though it has reduced the bank's income, the government's strategy of borrowing through long-term treasury bills and Pakistan investment bonds has also played a role. During the first half of the 2025 fiscal year, the private sector borrowed 1.907 trillion rupees compared to 521 billion during the same period last year. A significant portion of this borrowing occurred in December as banks rushed to meet a government requirement of a 50% advance to deposit ratio to avoid a 15% incremental tax. Banks also lent a record 1.354 to non-bank financial institutions in the same period compared to 485 billion last year. Conventional banks accounted for 1.112 trillion rupees of the private sector lending, while Islamic banks lent 733 billion rupees. The total credit extended to non-government sector reached 3.212 trillion rupees during the first half of the 2025 fiscal year, a significant rise from 382 billion last year.